While Bitcoin has been absolutely ripping over the last 3 months with a return of 65%, Coinbase has crushed Bitcoin with a return of 90%. So, is Bitcoin the way for you to play the crypto trend, or is Coinbase the better horse to ride? Let's dive in and find out. All right, 4 points that I'm going to cover in this video. Background/business model. Coinbase is the name brand when it comes to crypto exchanges, but many don't realize it has been around since 2012. Today, Coinbase operates in over 100 countries. It has served over 100 million verified users, and it is at the forefront of the future of crypto. Part 2, the opportunity, positives, and negatives. While there is volatility with crypto and significant regulatory risks, will global expansion, a trusted name brand, and favorable administration outweigh the risks? I will cover this all in detail. Part 3, company updates. 3Q24 results were fantastic, giving the stock positive momentum heading into year end. CFO Alessia Haas presented yesterday at a Goldman Sachs conference, and I have the key insights and takeaways broken down just for you. Part 4, valuation. On Wall Street, we build three-statement financial models culminating in a discounted cash flow or DCF valuation. I have built a three-statement model with a DCF for Coinbase, and I can't wait to give you all the details. So let's dive right in. If you're enjoying this, please smash that like button. Do you want to build wealth and have a proven system to pick winners and avoid losers?
No, that's not all. I want to be rich.
Investing success requires discipline, the skill of investment analysis, and the techniques that are proven. Some of the world's largest asset managers and investment banks pay me thousands of dollars a day to train their analysts. But what if you could have access to that knowledge for just a fraction of the cost?
Sounds good to me.
That is exactly why I created the Win Like Wall Street community, to give regular folks like you and me the tools and cutting-edge strategies to build wealth consistently and predictably. Don't wait. Right now, go to bit.ly/WLWS to join my exclusive community, Win Like Wall Street, where you can get the same Wall Street knowledge as the world's largest financial services firms, my Excel models, and direct access to me. See you on the inside. All right, part 1, background/business model. Imagine being one of the first pioneers in a brand new world, an entirely digital world of money, where coins don't jingle and bills don't fold. In 2012, Coinbase started its journey as one of those pioneers. How did it become the trusted gateway to this digital realm? Origins and mission. Founded by Brian Armstrong, a former Airbnb engineer, and Fred Ursam, a former Goldman Sachs trader in 2012, Coinbase was created to simplify access to Bitcoin. Its mission is to create a global open financial system. Growth milestones. Initially a Bitcoin wallet service, Coinbase evolved into a full-fledged cryptocurrency exchange. By 2021, it became the first major crypto company to go public via a direct listing, trading under the ticker symbol COIN. As of today, Coinbase operates in over 100 countries and has served more than 100 million verified users, cementing its role as a global leader in the crypto space. Cultural impact. Known for its user-friendly design and strong focus on security, Coinbase is often considered the entry point for first-time crypto buyers. So what's the takeaway? Coinbase is not just a company, it's a cornerstone of the crypto economy, acting as both an exchange and a trusted custodian for millions. So business model, how do they make money?
You gonna show me the money.
Think about a giant toll road that connects thousands of destinations. Every time someone drives across, the toll collector earns money. Coinbase plays a similar role in the world of cryptocurrency. Let's explore how the company turns a profit. Coinbase offers a suite of products and services that are designed to meet the distinct needs of 3 customer groups. Number 1, consumers. Individual retail user customers seek to discover or trade crypto assets and engage in on-chain activities. Number 2, institutions. Businesses that include market makers, asset managers, hedge funds, banks, wealth platforms, registered investment advisors, payment platforms, and public and private corporations. Number 3, developers. Developers, creators, merchants, crypto asset issuers, organizations and financial institutions, and other groups building decentralized protocols, applications, products, or other services on-chain. 52% of revenues come from transaction fees. So Coinbase charges fees ranging from 0.5% to 4.5%, depending on the type and size of transactions. These fees make up the bulk of the company's revenue and are tied to trading volume. 40% of revenues come from subscription and services revenue. 34% are from blockchain rewards and staking. Users can earn rewards for holding and staking cryptocurrencies through Coinbase, and the company takes a cut of these earnings. 4% from Coinbase One, a subscription plan offering zero trading fees, enhanced security, and customer support. 2% custody services for institutions. Coinbase stores crypto assets for hedge funds and large investors, charging fees for safekeeping. 8% of revenues, institutional revenue. Coinbase offers advanced trading platforms and analytics for professional traders and institutions. Other innovations. They've recently entered blockchain technology and Web3 development, adding long-term growth potential. So what's the takeaway? Coinbase's revenue is highly tied to crypto activity, but its diversification efforts are building new revenue streams for the future. Part 2, the opportunity, positives and negatives. I like the bad news first, so let's hop into the negatives.
So you're back on the negatives again.
Regulatory risks. The SEC has accused Coinbase of operating an unregistered securities exchange, creating uncertainty around its U.S. operations. New regulations could limit the availability of certain cryptocurrencies or change fee structures. The hope is that the new administration, which is more favorable to crypto, will alleviate these concerns. Dependence on crypto trading. Nearly 60% of its revenue still comes from trading fees, making it vulnerable to crypto market downturns. We saw the negative impact of this in 2022 during the crypto winter, where FTX went bankrupt and the industry faced a meltdown. The company lost $4.6 billion in revenue from 2021 to 2022, and it took nearly 2 years to recover. Volatility in stock price. Coinbase has been highly sensitive to crypto market conditions, making it risky for short-term investors. The stock is still down over 11% from its IPO over 3.5 years ago. Competition. Rivals like Binance and Kraken often charge lower fees, drawing away price-sensitive users. Coinbase has tried to overcome this through numerous transformative acquisitions over the last several years. For example, the $77 million acquisition of institutional brokerage platform Tagomi in 2020 strengthened its institutional offerings by adding advanced trading tools for large investors. The $80 million acquisition of blockchain infrastructure as a service provider Bison Trails in 2021 built Coinbase's cloud infrastructure and staking services. The acquisition of One River Digital Asset Management with expertise in institutional-grade funds in 2023 strengthened Coinbase's institutional product offerings and established a foothold in asset management. So what's the takeaway? Coinbase's reliance on the U.S. market and trading activity makes it vulnerable, but its global expansion could mitigate these risks over time.
You got to focus on the positives.
Trusted brand. Coinbase is known for its robust security and transparency, making it the go-to platform for many first-time and institutional crypto investors. Innovation and diversification. They're actively exploring blockchain technology, decentralized finance or DeFi, and Web3, which could open new markets. Global expansion. The launch of international derivatives platforms positions Coinbase to tap into non-US markets where regulatory hurdles are lower. Growing revenue streams. Subscription and staking services provide recurring revenue, helping to reduce reliance on trading fees. Strong cash reserves. With over $5 billion in cash and cash equivalents, Coinbase is financially equipped to weather downturns and invest in growth. So what's the takeaway? Coinbase is leveraging its strengths as a trusted market leader while building new growth pillars for the future. Part 3, company updates. 3Q24 results and the Goldman Sachs Investor Conference. So 3Q24 results, revenue was $1.2 billion, down 17% quarter over quarter, but up 93% year over year. The year-over-year growth shows Coinbase's resiliency and ability to capture market share even during crypto market fluctuations. However, the sequential decline reflects a temporary dip in trading activity, reminding investors of the volatility in crypto markets. Trading volume, $185 billion, down 18% quarter over quarter and up 143% year over year, driven by reduced crypto volatility but steady engagement. So the surge in trading volume year over year demonstrates significant user growth and higher adoption of the platform. The sequential decline is tied to temporary crypto market softness, but consistent engagement indicates Coinbase's strong market position. Operating expenses of $1 billion, down 6% quarter over quarter, reflect disciplined cost management. So tight control of expenses ensures Coinbase can protect profitability while reinvesting strategically in its growth areas. This is particularly reassuring for investors amid unpredictable market conditions. Adjusted EBITDA, $449 million, marking the 7th consecutive quarter of positive adjusted EBITDA, up from $178 million year over year. So, consistent EBITDA performance shows Coinbase's business model is sustainable and scalable. It highlights operational efficiency and the ability to generate cash flow across market cycles. Net income of $75 million, rebounding from a $2 million loss year over year, despite $120 million in unrealized crypto investment losses. So, Coinbase is demonstrating improved profitability and better cost management, overcoming non-cash losses in its crypto holdings. This signals a stronger operational base, which should instill confidence in long-term investors. Also, it's important to note the board authorized a $1 billion share repurchase program, demonstrating confidence in financial stability. Future expectations. Number one, revenue drivers and financial projections. So the company has a continued focus on subscription and services growth, particularly in staking, custody, and USDC integration. International expansion to offset market headwinds. Revenues in high-growth markets like Brazil and Singapore now exceeds direct costs. Coinbase One subscriptions hit all-time highs, bolstered by enhanced benefits globally. Expanding derivatives trading to attract active traders and institutional engagement. Expect Q4 subscription and services revenue to range between $505 million and $580 million. Also, anticipate challenges from declining Ethereum prices and lower interest rates. Technology and infrastructure. Enhancements to Base to improve user experience and attract developers. Expanding smart wallets, reducing friction for onboarding and driving user growth. Regulatory outlook. Ongoing litigation with the SEC aimed at achieving greater regulatory clarity. They are optimistic about U.S. pro-crypto legislation post-2024 election with bipartisan momentum and growing crypto voter influence. Some key takeaways for investors. Strengths. Robust financial position for the company, strong innovation pipeline, and growing international presence. Risks. They do have a dependence on volatile crypto markets, and there's regulatory uncertainty. Opportunities. Significant growth potential in derivatives, stablecoins, and infrastructure utilities such as Base and smart wallets. Yesterday, Coinbase CFO Alessia Haas presented at the Goldman Sachs 2024 U.S. Financial Services Conference. There were a lot of amazing insights that were revealed, and I have mined all the gold nuggets just for you. Strategic focus for 2025. Growth priorities, revenue diversification, product adoption, and regulatory clarity. Big opportunities, pushing legislation with a pro-crypto Congress and building utility-focused products like payments and decentralized apps. Developer ecosystem. So they're attracting US-based innovation by creating tools for developers built on Base and USDC. Crypto market trends. The post-election surge saw Bitcoin hit 100,000. The crypto market cap has spiked and adoption has broadened across retail and institutions. High-end guidance. Q4 revenue is tracking strong, with sales and marketing efforts scaling to seize market momentum. Regulation is turning pro-crypto. Favorable climate. Pro-crypto Congress, Senate, and administration paved the way for stablecoin clarity, tokenized securities, and innovation-friendly laws. Institutional influx. Regulatory clarity is expected to unlock massive institutional capital, mirroring the early internet boom. Product expansion. So what's next? Staking services growing despite prior hurdles. Launching tokenized securities markets and expanding derivatives. Scaling USDC for global payments. Also, derivatives growth, expanding internationally with new licenses like MiFID in Europe. Global push. 2024 wins in key markets like Canada, Brazil, and Singapore are now covering costs. 2025 goals to broaden reach with localized products and exploring new regions. Competitive edge. So why does Coinbase win? They're trusted for security, ease of use, and deep liquidity. They also have a unique capability to support multiple blockchain protocols. They also have a collaboration mindset, helping competitors and banks adopt crypto through Coinbase's tools. Financial discipline. They've shown smart spending, such as leaning variable costs like sales and marketing while keeping fixed expenses tight. M&A moves. They're focused on acquisitions to accelerate entry into new markets and products. Capital strength. Positive cash flow enables share buybacks and strategic investments. Key metrics. Steady fees. Retail fee rates are holding strong with no compression despite rising volumes. USDC milestone. The market cap at $40 billion with continued focus on global adoption. ETFs and institutional growth. So ETF leadership, they are the custodian for 17 of the 20 crypto ETFs, driving institutional access. Momentum. Regulatory clarity brings more capital from institutions and corporates. So, what's the takeaway? Coinbase is doubling down on growth, innovation, and regulatory clarity in 2025 while scaling globally and staying disciplined with spending. The company is leading the way as crypto goes mainstream. Part 4, the moment we've all been waiting for, the valuation. We start with the balance sheet. So cash has increased 2x over the last 3 years. This shows that despite the stock's volatility, the balance sheet is solid. Also, cash gives the company optionality to do more acquisitions or reinvest in the business. We're going to see this later in the cash flow statement. While this is not a capital intensive business, the company has no headquarters and is one of the few fully virtual companies of its size. Goodwill of 1.1 billion is the result of the 9 acquisitions the company has made over the last several years. While the company has increased debt significantly to 4.2 billion as of September 30th, 2.5 billion of that is convertible and would only dilute shares by under 3%. The convertible debt interest is PIK or paid in kind, which means that it accrues to the balance and is not cash interest. Retained earnings has seen a steady increase of 2.5x over the last 3 years and is projected to increase 4x by the end of our model. This is a very positive sign that the company continues to generate positive net income and they do not pay a dividend. So what's the takeaway? This is a growing business with a rock-solid balance sheet that is able to weather the storm of a volatile crypto market. Let's hop in the model. All right, balance sheet. So as we mentioned, a 2x increase in cash over the last 3 years. Goodwill has increased significantly. That's because they've made so many acquisitions. Now, while debt is pretty high, I'm not too concerned about that because they're able to service it and the bulk of it is convertible and it's not going to have a major impact in terms of dilution to shareholders. Lastly, we see retained earnings is positive and growing. This is a fantastic sign for investors. Next, we have the income statement. Revenue has seen a 3-year increase of 2.4x and in the base case is projected to double by the end of our model. Despite the volatile crypto market, gross margin has averaged 85% over the last 5 years and is currently 86.5% year to date. After a tough 2022, the company reduced operating expenses from 4.4 billion to 2.6 billion in 2023. This resulted in a swing of EBITDA from minus 1.8 billion in 2022 to positive 86 million in 2023. That cost discipline resulted in positive net income of 95 million in 2023 and is projected to 25x by the end of our model. We have seen a pretty significant swing in returns on equity and invested capital since the IPO, with return on equity going from 99% in 2021 down to negative 44% in 2022 and back up to 1.6% in 2023. And return on invested capital going from 65% in 2021 down to minus 24% in 2022, back up to 0.1% in 2023. Both metrics should improve going forward as cost discipline kicks in and operating and net income remain positive into the future. So what's the takeaway? Coinbase weathered an exceedingly tough 2022, but is now on track for solid financial metrics moving forward. Let's hop in the model. The income statement, we see revenue has a 3-year increase of 2.4x. I want to dig in real quick to their operating expenses. They've gone from 4.4 billion in 2022 down to 2.6 billion in 2023. There was a massive restructuring that occurred in 2023, and that was indicated by this massive reduction in cost. This will be a huge help to the company on a going forward basis. Next, we look at the EBITDA, positive 86 million in 2023, which is phenomenal. Also, positive 95 million of net income in 2023, and it's only going to continue to grow in the future. All right, cash flow statement. Free cash flow has gone from 275 million to 860 million, a 3.1x increase over the last 3 years, primarily driven by net income. Free cash flow is projected to increase to over 2.1 billion by the end of our model. Now, while there is volatility outside of the rough 2022, the company has consistently generated positive operating cash flow. As you can imagine, this is not a capital-intensive business, so that's a plus. Over the last 5 years, the company has issued 342 million of equity and 3.6 billion of debt, with the bulk of the debt being convertible into equity. As I mentioned earlier, even if the convertible debt is converted, it will only dilute shareholders by under 3%. Despite the heavy debt issuance, it is only around 5% of total capital, and the company is generating plenty of cash flow to service it. Cash is projected to increase by nearly 75% at the end of our model. So what's the takeaway? After surviving a very rough 2022, the company is projected to generate solid and consistent cash flow on a going forward basis. Let's hop in the model. Right, cash flow statement, we see a growth in free cash flow over the last 3 years of 3.1x, again, primarily driven by net income. They have positive cash from operations in 4 of the last 5 years. CapEx is not terribly high. As we saw, they do have equity issuance, but it's far outweighed by the debt issuance. But ultimately, they can service it, so we're not that concerned. Forecast drivers and DCF assumptions. So top line revenue has been super volatile with a 6.1x increase in 2021, followed by a 59% decline in 2022. We cannot use the historical growth as a guide, and Wall Street has a 5-year compound annual growth rate range from -2% to +22%. I used a range of +2% to +22% for our cases, with the base run at 12% revenue growth. With a massive restructuring in 2023, operating costs went from 154% of revenues in 2021 down to 70% year-to-date 2024. The company has the highest beta of any stock we have ever reviewed of 3.4, which is very high risk. This is the main reason for our weighted average cost of capital of 16.5%. Also, the company has a junk credit rating from S&P Global of BB-. The good news is that the company has about $7.8 billion of cash as of 9/30/24. The terminal multiple of 9.5 times LTM revenue is slightly below the comps and is in line with the historical average for the company. We're going to see this next in the DCF model. So what's the takeaway? Conservative assumptions equals conservative results. Let's hop in the model. So as mentioned here, I want you to notice they had a massive amount of operating costs in 2022, about 154% of revenues. They were able to significantly reduce that to 96% in 2023, and it's only 70% year-to-date 2024. As I mentioned, the sales growth range that we're using is 2% to +22%, beta of +3.4, which is absolutely massive. They have a BB- credit rating with a stable outlook, but that is a junk rating. It's below investment grade. That being said, their debt is only about 5% of their total capital. We see that they have a massive amount of cash of about $7.8 billion. Now, I want to dig into this note right here. We see the TEV to LTM revenue for the comps, which are other exchanges such as NASDAQ, ICE, CME, and CBOE. The average is 10.1x. Now, looking at Coinbase's average over the last 14 quarters since the IPO, it was 9.3x, and the average excluding high lows 8.4x. So I went with 9.5x, really indicative of what the company has done since the IPO, and it's slightly below the comps. All right, DCF valuation. We ran 3 scenarios, bear, base, and bull with the current model at base. Future cash flows are discounted back to today to get to TEV. We strip out net debt to get to equity value. Coinbase is the leader in crypto exchanges. Coinbase is up 95% in the last 3 months versus Bitcoin, which is up 65%. While this has been an incredible run, it is still down over 11% from its IPO, but is it worth buying today? Wall Street has Coinbase at a median of $278 per share, which is an 8% premium. What does our analysis show? Let's hop in the model. DCF time. Woo-woo. So we got EBITDA less DNA gives us EBIT. We strip out cash taxes to get EBIT or NOPAT. We add back the DNA. We take into account changes in operating working capital, strip out the CapEx. That gives us FCFF, or free cash flow to the firm. We have our terminal value, which remember is 9.5 times terminal revenue. That gives us our cash flows to discount. We multiply that by the discount factor to get the present value of cash flows. We add those together to get TEV. We strip out the debt. We add the cash. We strip out non-controlling interest. We add in associate investments. We get an intrinsic equity value of $54.8 billion. Divided by the current shares outstanding, that gives us an implied share price of $219 per share compared to the recent close of $302.42. It's about a 28% premium and is definitely a sell rating. Sensitivity and scenario analysis, we ran 50 different models by utilizing data tables. We sensitized revenue growth versus research and development and WACC versus the terminal multiple. 45 out of 50 or 90% showed a sell rating, 5 out of 50 or 10% showed a hold rating, and 0 out of 50 or 0% showed a buy rating. We ran each of the 3 scenarios equally weighted, got a weighted average value of $230, which is about a 24% premium. So what's the takeaway? Utilizing conservative assumptions, we show a sell rating for the stock in the bear and base and a hold in the bull case. Let's hop in the model. All right, y'all, sensitivity analysis looks like a ketchup and mustard fight, and ketchup is winning. So what we see here ultimately is the stock is overvalued, even using conservative assumptions. Even if we use aggressive assumptions such as the 22% revenue growth and a very low research and development, we get right around what the stock is currently trading at, a little bit above. So that would give us a hold rating. In the case of the terminal multiple and the WACC, this high WACC is really weighing on the ultimate value of the company, just something to be mindful of. As the stock and the company becomes less volatile, that should move down the WACC, which should move up the valuation. Last but not least, we have our scenario analysis. We have about 141 in the bear case, 219 in the base case, 331 in the bull case. So we get 2 sell ratings and 1 hold rating. The weighted average is 230. Ultimately, that's a 24% premium and not a stock that we would consider buying. All right, the wrap up. Wall Street has Coinbase at a high of $420 per share, which is a 39% discount, a median of $278 per share, which is an 8% premium, and a low of $150 per share, which is a 50% premium. Now, you should seek the advice of an investment professional always. I do not know your individual financial situation, and this content is meant to educate and is not investment advice. That being said, I personally do not have a position in Coinbase, and I think it's gotten a little ahead of itself. While it was appealing before this big run, it's currently overvalued. Since its IPO in April of 2021, the stock is still down 11.5% over that same time frame. Bitcoin is up 73%, Nvidia is up 773%, and the S&P 500 is up 45%. Now, interesting analysis here. The correlation between Bitcoin and Coinbase is pretty high at 0.83, but surprisingly, Bitcoin has a higher correlation with the S&P of 0.89. With its high correlation, Coinbase shows similar volatility to Bitcoin, but has not given as nice of a return.
Hey Stuart, you wanna mine some Bitcoin with us?
Remember, Coinbase does not make its money by holding Bitcoin. It makes its money from people trading Bitcoin and other cryptos. So when the market heats up, it does well. When it cools down, so does their revenue. If you are trying to play crypto, Coinbase might be an option longer term, but investing in Bitcoin has proven to be superior. While Coinbase has the benefit of producing cash flow, while Bitcoin does not, it displays the volatility of Bitcoin. We need to look at Coinbase just like any other exchange: NASDAQ, ICE, CME, CBOE. All of them are heavily dependent on the overall market, trading volume, and the fees that come from said volume. Now, Coinbase does not offer great returns on equity nor invested capital, and I think we should see some more stability moving forward, but it doesn't really excite me. Coinbase might be a good option to trade, but I don't see it as a promising long-term investment option until there is greater adoption of crypto, which should only continue moving forward. Now, if you like this and you want to see another in-depth stock valuation, check out my Intel model here or my Celsius model here. And if you found this valuable, please share this with someone who you think would enjoy this. And as always, be relentless.